Hey, this is Michael and welcome back to me and Paul's channel. I'm so excited to have you here. Before we dive into this video, I want to make sure you subscribe to our channel because we have new videos coming out every week, and turn on the bell so you get notified and don't miss out on any of these new videos. We talk about buying real estate, selling real estate, and all the strategies we use, like virtual wholesaling, buying and managing rental properties, renovation projects, private lending, and owner financing. We buy primarily through online auctions off the MLS and through wholesalers, and we've purchased in 44 states. With that said, I'm going to dive into today's video. How to invest in real estate. There are numerous different strategies and ways to invest in real estate, and can be overwhelming if you're a new investor. In this video, I'll explain what I think are the 11 best real estate investing strategies. These strategies will give you a better idea of how to make money in real estate investing. And hopefully one or more of these strategies will be a good fit for you. So this video can provide the perfect starting point for your own real estate investing journey. Let's get started first by, what are your financial goals? Why do you want to invest in real estate? To diversify your financial portfolio, or to take an old house and make it new again? And do you want to be an active or passive real estate investor? Do you want to own property versus invest your money in properties? How much time or money do you have to dedicate to real estate investing? Some real estate investing strategies are more of a business than investment. These strategies can generate income and replace your job, but you must be prepared to invest the upfront time and effort of a business startup to make them work. Do you want to deal with tenants, manage a renovation project, or hire a contractor or property manager? Or do you just want to lend money on renovation projects and collect a debt or equity return? You spend a lot more time owning and managing rental properties than with buying a REIT that's listed on a stock exchange. With these strategies, you're more like, these first, call it 4 strategies here, 1 through 4, are more likely to be businesses, and they're not really passive until you maybe build business systems and have a team to do the work for you. But so these first 4 are more business intense, and kind of go through each of them now. The first one is fix and flip. The fix and flip strategy is the business of finding properties that need work. You got to do all the renovations or hire a crew to do it, and then resell them at top price for a profit. If you ever watch those house flipping shows on TV, this is what they do. It's not always easy as the 1-hour show displays. There's always managing logistics of like when materials come in, meeting timelines, and surprises that arise from full home renovations when you're tearing down walls. But the beauty of this project is at the end, you have beautiful finished homes, and sometimes you get large chunks of cash that are very rewarding. You could easily make 6 figures on a buy, fix, and resell type of project. And next one here is wholesaling. Wholesaling is the business of finding good deals on properties and then reselling them quickly for a markup. In this business, you need to be good at marketing and negotiating to find those good deals. You will also need to spend a lot of money on offline and online marketing to generate these leads. Another approach to wholesaling is no marketing to homeowners, but you got to constantly search for properties on auction sites and the MLS and make offers on those properties or bid on them if it's an auction. Third one here that I have is wholetailing. It's basically buying a house and making minor renovations to make the house mortgageable to an end buyer. So renovation costs are usually less than, call it $15,000, and can be completed in less than a week or 2. It's a great way to maximize your wholesale profits. And then the last one here is buy and hold and the focus of this strategy is more wealth building. This strategy involves buying and holding rental properties for short periods of time, or keeping them for a long period of time. If it's a short period of time, say 1 to 5 years, often the purpose of this short-term strategy is to add value by renovating, raising the rent, decreasing expenses, or all the above. This works great for multi-unit apartments, and where you have to, it's like a turnaround project. You buy an apartment that's distressed. It also works well for rentals in high price and high appreciating markets that don't cash flow very well, but you kind of have a tenant in there for a few years, and the appreciation is growing at steady clips, and you could cash out in a few years with the growth in your equity as they pay down your debt. And then you can reinvest these profits on the shorter time periods into newer and larger projects through things like 1035 exchanges and the tax code, where you could defer your taxes. Now, if you have a longer time horizon for buy and hold properties, and that's part of your plan, then the benefit of this is kind of like a slow and steady strategy where you include rental income over time. You have some tax shelter from the depreciation of expenses. You amortize down your loans. You have price appreciation potentially. And then ultimately, you can use profits from other real estate investment strategies that I mentioned above to pay off your mortgages faster on these longer term holds. So you're collecting more of a higher cash flow when that debt gets paid off. The next two, numbers 5 and 6 here, are more lifestyle choices for real estate investing. So the first one is house hacking. Now, this means living in a home that also produces income, like living in a duplex or a triplex or a house with extra rentable space, like a guest house, a basement, or some spare bedrooms. By renting out part of your residence, you can reduce your total housing costs. This is a great strategy because you learned a landlording business while you're living in your rental. And once you are done living there, you can move out and transition the property as a long-term rental and rent it totally out. This is how I started in real estate investing. And after college, I bought a 2-unit property. I lived in one unit and rented out the other. Then I kept it for several years and sold it for a nice 6-figure payday. The second of the like the lifestyle choices is the live and flip. This is a strategy where you buy and move into a home, fix it up, wait 2 years or more to resell for a profit. If you follow the IRS rules, you could pay no taxes on profits, up to $250,000 for an individual or $500K for a couple filing joint. I know several people have done this 2 or 3 times in their life, and then they bought their dream home basically for cash, no mortgage, because of the money they made moving and flipping 2 to 3 times. However, it can be challenging, moving every few years, especially if you have a family and having the house constantly under construction. Now, these last strategies are more like investments and are more passive. It is a way to invest in any of the other strategies mentioned above without having to put the deals together for yourself. So the first one here is hard money lender. You can passively invest your money with a hard money lender. So hard money lending is a strategy of making short-term loans to real estate investors who buy rentals or fix and flip properties. Usually the loans involve high interest rates, points. So those are like fees up front and specific like loan to value ratios. You can easily earn 10% on your money if you invest this money with a hard lending company. They're always looking to grow their capital to fund more deals. The next one is more of an individual basis. You can be basically the bank. You lend your money to a real estate investor, and that's what a private lender is. There are different ways to do this. You could just lend money and receive monthly or quarterly interest income payments from them, say 15%. And an investor basically uses your money to wholetail renovation projects. It's basically a line of credit for them, and you are the bank. And then you could also create a mortgage and note for a specific renovation project where you could have an equity split or you get treated as like a debt instrument. Equity split could be on a specific rehab project. You guys split 50 of the net profits. So if at the end of the day, the net check is $50,000, you get 25 and the investor gets 25,000. And then, while the strategy can be very profitable, it also has risks. You might want to take, you might have to take back some of the properties at foreclosure if the person doing the renovation project fails or walks away from it. So just be prepared for that. And then the other one is real estate notes. When we wholesale houses, we sometimes sell with owner financing. So instead of having someone buy the house with cash or a loan, and we make our profit at closing or settlement, we actually become the bank. We collect a down payment from them and monthly payments over how many months with interest. We basically keep the cash flow ourselves, or we could sell the note and cash out. One example of this was a property we had in New York where all in, we bought the house for $16,000 and it was worth fixed up. It was on 5 acres of land of about $100,000. It needed work. However, the family that bought it had about $30,000 in cash, and we were marking the property for sale for $35,000. However, they had $20K for a down payment. So at settlement, they pay us $20,000. So we're made whole, holding costs and purchase price at settlement with $4,000 of profit right away. And then we created a note over 2 years at 9% interest and created those monthly payments for 24 months. That's a shorter term note. Sometimes they're longer, like 5 to 7 years. But the way I think about notes is basically landlording without the headaches. So what that means is, you don't have tenant calls, you don't have maintenance stuff. You just have someone living in the house, owning it essentially, and just paying you back over time. So that's another way to invest in real estate. And a different form of real estate note investing is if you don't have properties to sell for owner financing, you should actually, go to companies that buy notes. So you could, work with a broker and buy these notes from owner financing or from banks. And you could also, similar to like hard money lending, you could invest your money with a note company and earn like a rate of return, say around 10%. And you own a fund of notes essentially. So another way to diversify your portfolio just from like all equity markets. And then number 10 here is syndications and crowdfunding. Syndications is essentially pooling your money with other investors to buy real estate. It's a way to invest in any other real estate strategy mentioned above without having to put the deals together yourself. Crowdfunding is a newer form of syndication investing where the deal opportunities are marketed through online platforms like Fundrise. They may require you to be an accredited investor, but you can sometimes begin investing in real estate with as little as $1,000 to $5,000 per investment. And then finally is real estate investment trust, or REITs. REITs are companies that own or finance income producing real estate across a range of property sectors. These real estate companies must meet several requirements to qualify as a REIT. And most REITs trade on major stock exchanges, and they offer several benefits to investors. REITs invest in a wide scope of real estate properties like offices, apartment buildings, warehouse, retail, medical facilities, data centers, infrastructure, and hotels. Most REITs focus on a particular property type, but some hold multiple types of properties in their portfolio. Most REITs operate along a straightforward and easily understandable business model. Basically, they buy leasing space and collect the rent on its real estate. The company generates income, which is then paid out to shareholders in the forms of dividend. And REITs must pay out at least 90% of their taxable income to shareholders. And in return, the shareholders pay income taxes on those dividends. Now, you've learned a lot about the best real estate investing strategies today. Each has its own pros and cons. I've used most of these strategies and changed course over time as my financial and personal goals have changed. For example, you may begin with house hacking, then transition to fix and flip, and finally to buy and hold rentals on the side. Now, don't worry if you try one strategy and realize it doesn't work for you. Sometimes you got to experiment a little bit and try things that don't work before you find what's best for you. Good luck with your own real estate investing strategies, and feel free to reach out to us with any questions.